Hello everybody and welcome. My name's Alison Fenner. I'm Executive Business Advisor at IAB Europe and I'm going to be your host for today's webinar. In this webinar, we're going to explore the results of the ADEX Benchmark H1 2017 report. Our ADEX Benchmark report is the definitive guide to the state of the European digital advertising market. So please note that this PowerPoint and the report are available on our website. So we have a full year written report available for 2016, and this is the report for the first 6 months of 2017. So the full year 2017 numbers are going to be presented at our annual Interact conference on the 23rd to 24th of May in Milan. More about that later. And then they'll again be followed by a full report in June. So today's webinar is going to last approximately 40 minutes with time for your questions. If you want to share the live presentation with your colleagues afterwards, the webinar recording will be available afterwards on our website. So let's do a bit of the usual housekeeping first, shall we? So please note on your screen there's a chat panel and a questions panel on the right-hand side. And you can submit any technical queries or issues in the chat panel and we'll respond to them. And you can submit questions for Daniel in the questions panel, okay? If you need assistance during the session, you can raise your hand by clicking the hand icon on the control panel. Okay, so I'd now like to move on without more ado and introduce today's presenter, Daniel Knapp. Daniel is Executive Director TMT at IHS Markit, the author of the ADEX Benchmark report and research partner of IAB Europe. So welcome, Daniel, and over to you to present.
Thank you very much, Alison, and a warm welcome from me as well. So we're going to dive right into the numbers. ADEX Benchmark 2017, of course, H1 2017. It's a long time ago already, but it always takes time to aggregate the numbers and to validate them. So we published the report last November, and are following up with a webinar and a Q&A. And although H1 2017 is a bit away already, these numbers haven't lost their relevance as they provide a valid indicator for how the full year 2017 is going to shape up. So it's going to also a sneak preview to the numbers that we will discuss at Interact. And it's also particularly interesting here, of course, because 2017 is the last year before the GDPR hammer is going to hit. So it's kind of an industry, a last snapshot of the industry prior to a new regulatory regime. So let's start with how we conducted this study. Many of you will be familiar with the method, but our H1 data, how we collate it, slightly differs from the full year data. Again, we look at ad spend. So this is ad spend the publisher receives before the deduction of agency commissions. How did we collect this data? Now, usually we have 27 IABs who submit their national data to the full year ADEX, but not every IAB is conducting a half-year study. So to provide a good picture for the half-year, we combined different methods. We started by looking at the available H1 data, and 12 out of 27 IABs have submitted that, and also worked with other local IABs to provide local insight to see, even though they don't publish a formal report, where things are going in their respective markets. Also, at IHS Markit, in my team, we have a large number of analysts who crunch the numbers on advertising globally, on different companies and so forth. So we have an up-to-date picture here as well on how the market is developing, and we use that to fill gaps in the coverage from the IABs and provide data for those IABs who were not able to support data. Of course, as usual, local market cultures and different trading standards necessitate that IABs cater with their methods to their respective market. But this means that data is not always comparable, like for like, on a pan-European basis. So we do adjustments and tweaks so that we can ensure that the data is one-to-one comparable on a pan-European basis. So some of you go back in the national markets, they'd see sometimes slightly different numbers, but that's no reason for concern because the method is different. Our emphasis is on having a harmonized view across Europe. Why do we do this? Not just to provide pan-European numbers, but also, of course, to provide benchmarks and indices as to the development and maturity of all the markets so that one market can see what others are doing well and so forth. So without further ado, let's dive into the data from all the countries that we cover here. The big picture reveals the following thing. In the first half of 2017, the market was worth 22.5 billion euros. That is more than the entirety of the market was worth for the full year less than 5 years ago. So half-year figure now is a very healthy size compared just to the full year a couple of years ago. How did this look at the growth trajectory? If we look back at H1 2016, adjusted numbers suggest, is adjusted for exchange rates and so forth, that we have an 11.5% like-for-like growth from 20.2 billion euros to 22.2 billion euros. Interesting here is that we are continuing to see a double-digit growth rate in 2017. To remind you, in the full year 2016, we saw 12.2% growth year on year, and the European online ad market has consistently kind of been around the plus 12, plus 13% mark for the last 5 years. And as the market matures, usually growth slows down, but it is an encouraging picture to see that growth remains double-digit, and I will provide some conclusions and preliminary estimates for the full year 2017 to see whether we can expect such a positive development for the full year as well. If we segment this market a little bit and see what's really underpinning this growth, there are a couple of trends to observe. As usual, we split into three general formats: display, search, and classifieds and directories. Display over the last couple of years has become more and more of an umbrella category of very different things in there: banner, rich media, video, instant video, outstream video, newsletters, and so forth. Search is kind of the purest category, if you will, with just one thing in there. And classifieds and directories has changed as well over time as the market structure has changed. Today, many websites that are classifieds and directories players have pivoted towards display advertising. So the classifieds themselves are not the primary source of revenues anymore. So a lot of revenue of these sites is actually contained within the display category. So if we dive into the numbers here, we can see that the highest growth proportionately comes from the display market with plus 13.1%, followed by search and classifieds and directories lagging behind quite a lot just due to the structural change in that market that I mentioned. If we look at search for a moment, of course, we see growth here coming in particular from mobile search, from new advertisers, in particular small and medium-sized companies being onboarded, and so forth. I think cost per click has been fairly stable, and after initial issue with mobile CPC, rates are here stable and on the up. So it's a volume and a rate play as well. In display, many factors contribute to this growth. As we'll see later, we have some laggards in the display category, such as banner display on desktop, but also we have some growth drivers, very high growth drivers, such as video advertising, programmatic, and so forth. So we see a general shift towards mobile, towards programmatic and video, similar to the last couple of years, and this trajectory continues and is fueling the market. Overall, we saw 1 billion euros being added to the European display market in the first half year, 1.2 to search, and just 0.1 to classifieds and directories. Overall, in terms of share of the European digital ad market, search maintains the lead and even expanded it slightly. Of course, we see a squeeze in classifieds and directories, but display also increased its share. That's something we've seen consistently over the last couple of years, where the reliance on search for overall growth was much stronger. We now see display taking a larger contribution to this growth, and this is a trend that we are expecting to see continue over the next couple of years as well. So within these 2.3 billion euros of total additions, let's look into the display category. I already mentioned that there are certain drivers in here, and here we look at video. Video is a mainstay of digital display today, not least because we see many different players in this category. We see YouTube, we see Facebook, Snapchat, Twitter, all with a strong emphasis on video or a pivot to video. We see broadcaster video being rolled out aggressively, with more inventory being available, with stable ad rates, and also with increases in targeting capabilities through programmatic, for instance, and also through, for instance, sales house aggregation, which provides centralized points of contact to buy advertising inventory through a single source. In general, in Europe, we see it's mostly a supplier's market, as demand for video, or premium video, still outstrips supply. We've seen a kind of long tail of video emerge, but a lot of value is still located in the premium video category. Also, in particular in the outstream domain, there is a lot of traction. Outstream for us, where we don't split it out here, refers to outstream specialists, but also newsfeed advertising and so forth is something that would classify out of stream. Stream here, of course, meaning a stream of editorial content in which ads are being placed. Video advertising for us, in-stream video advertising refers to pre-rolls, mid-rolls, post-rolls. Overall, we see the kind of post-roll segment decline, strong emphasis on pre and mid-rolls, in particular in long-form video. Mid-rolls are becoming increasingly attractive, and overall, again, strong growth in this category. We've also seen many publishers pivot to video. This is something that has not worked out for everybody. If you follow the news, a pure pivot to video was not sustainable due to the high production costs of video. However, we've seen other players who have mastered video and found a sustainable way of monetizing it as production costs also go down. On the growth side, it's pretty clear what impact video has, and that it's still, despite its now healthy size, a highly dynamic category. The non-video part of display just grew below 10%, so below actually the total growth rate of the market. Reminder, 11.5%, and video really is nearly 3 times that much. 30.5% growth rate across Europe really indicates it's a highly dynamic category, and we will see high double-digit growth rate continue over the next couple of years. And we see a skew in the video market towards some large markets like the UK, for instance, the Netherlands, Germany. The Nordics have been very, very strong in video, but we see it increasingly also being relevant in the CEE markets, and Southern European markets have ramped up as well. In particular, data availability has helped. In the next couple of years, we'll see this continue. I'll remind you, for instance, of EBX, the European Broadcaster Exchange, based in London, but with partners from France, from Germany, from Italy, and other initiatives that mean that growth is really something that is happening across borders and across countries. So nearly 20% of all display now is video, and we'll see this grow to 25 and 30% over the next 2 years, according to our internal forecasts. So video is 3.2 times grows 3.2 times faster than the rest in display. And of course, if you overlay mobile video or programmatic video as subcategories, growth will even be stronger than this. And indeed, if we look at the overall pie here, so here you see kind of all the components that we track in more detail, you can see how video is helping to grow the share of overall display. I mentioned previously that if you compare total display, search and classifieds and directories, total display is slightly increasing its overall share of the market, but you can clearly locate here where this share expansion is coming from. It's not coming from overall static display, although there are growth drivers in there as well. But declines in banner display advertising, for instance, mean that part isn't growing at all. However, video is the factor that really expands this market overall, as you can see here in the dark blue bit. Note that we're rounding the numbers, so it might not add up directly to 100.0%, but this is just due to rounding. Another growth driver, obviously, has been for the last couple of years is mobile, and we see this again evidenced in H1 2017, where the growth trajectory of mobile continues. If we look at just half year, we see a billion being added in mobile display. We see nearly 1 billion added in mobile search, and total mobile sees an addition of around 2 billion. So overall, 7 billion addition in mobile, a highly dynamic segment. Note, please, that mobile and video are not disjoint categories, so you can't really compare in the study total mobile versus total video. Mobile here includes both display and video in the display category. And now, if we look at, with that in mind, seeing that mobile contains both video and banner advertising and other static assets, from a device perspective, desktop versus mobile, nearly all growth on an ad spend is taking place on mobile. Desktop investments are actually shrinking, as you can see here, even with video included. Pure desktop display is down 1.4%, and we'll see a continued contraction of this market going forward. On the search side, we can also see, of course, the relevance of mobile, in particular, location-based search, search in maps and so forth. But there's still some life left in desktop search, which is growing, well, at least at a 4.1% rate. If you look at total mobile, total desktop, again, the picture is pretty evident that the focus here is on mobile devices. We're not including here, let's say, newer devices or a more granular device segmentation. If you would look at addressable TV, for instance, you'll of course see an explosion here as well, but from a very, very low base. We see, of course, a lot of hype around advertising around smart assistants, etc. But these are mainly experiments and conversations for the future, rather than factors which contribute to growth of the market overall today. So if we look at the mobile proportion across formats again, we can see that more than 1/3 of all on ad spend now is mobile. Again, bear in mind we have 27 markets in the study, and although we don't split out individual countries here in this H1 update, if you go back to the 2016 full year study, it's clear who are the main markets behind this mobile growth. The UK stands out and other mature Western markets. It's interesting that the German market, one of the largest markets in Europe, and an increasingly dynamic market, is still lagging behind in mobile adoption. Key factors for this here are mobile readiness. It's about the availability and audited availability of supply, and also whether publisher sites are mobile ready, for instance. But you can see how quickly the mobile share ramped up from around 30% in display here in 2016 to nearly 40% in H1 2017. And a similar ramp up we also see on the search side. Interestingly here, that mobile on desktop is better monetized than search. This, of course, has to do with the search frequency on mobile, the fact that in mobile operating systems, you increasingly move from search to find engines, that certain search features are baked into the operating system. So it's not all search activities on mobile are as easily monetizable as search opportunities on the web. And of course, we see on the mobile display side with Facebook in here, which has had a phenomenal year again. So in total, 37.4% of digital ad spend now taking place on mobile. Let's expand the view a little bit and look at this growth in context. So here are all different segmentations that we provide in the study, and you can clearly see the variances of growth. So the very different stories attached to each of those different formats, where the top four here really stand out: mobile display, overall mobile search, and the video category. So these are the really strong growth drivers of the market, and everything else is kind of the aggregate categories behind that fall back. And then if you look at pure desktop, you can see the growth is fairly anemic, and that all publishers are advised to monetize mobile devices in a much better way, as this is where future growth is going to lie. Well, we don't split out countries. We have a regional comparison available in the studies, Western versus Eastern Europe. We could also look at Northern versus Southern Europe, but it's quite interesting to see here on what phenomenal growth trajectory Eastern Europe has been, which historically has been due to lower broadband penetration, lower broadband speeds, and a kind of TV-heavy market, in particular after the fall of the Iron Curtain, not a digital-first market. So in Western Europe, we see out of these 22.5 billion, we see the vast majority is located here in Western Europe. We can see video is slightly larger than the total, than in total Europe is 7.6% video. We also see the search category more pronounced in Western Europe, and classified directories, whereas Central and Eastern Europe search is less pronounced. Video display is stronger. But interestingly, we've seen a strong catch-up in Eastern Europe of video, as I mentioned at the outset of this presentation, and it's just 1.5 share percentages behind Western Europe in the overall market composition. And in mobile, again, we see similar trajectories. Eastern Europe has the advantage of being a second mover market, which means that as measurement standards or supply infrastructures have been established overall for the mobile industry, so how to crack a monetization on mobile, these concepts scale very well, and the markets are able to implement these things very quickly. So we see a very similar trajectory in terms of mobile growth in Western versus Eastern Europe. The overall numbers are quite different though, but if you just look at the composition of the charts and the growth here, it is indeed quite similar. What stands out though is that search is proportionately, mobile search proportionately higher than in Western Europe. Now let's close this with an outlook of what's going to happen for the full year 2017. The final numbers, of course, will arrive fresh for Interact, with contributions from all 27 different IABs. But based on our experience of past years, we can make a confident forecast on how 2017 overall is likely going to look like. Let me direct your attention first to the left pie chart on this slide. So in order to come up with a full year forecast, we first needed to understand what the relative importance of H1 to full year results is. So that is the relative weight of H1, because H1 and H2 in a full year are not evenly split. We have usually a very strong first quarter in advertising, as in the new year companies launch products, but a fairly weak second quarter, which is exacerbated depending on whether Easter's in the first or the second quarter. If Easter's in the first quarter, the second quarter is usually even weaker. We see, due to the summer period, a fairly weak third quarter, which is the weakest of the year traditionally, but due to the Christmas business, a very strong fourth quarter, which is usually the most important quarter in one year for advertising. So top quarter Q4, second quarter Q1, and then it's Q2, and then it's Q3. So bearing this in mind, H1 historically has a weight of around 48%. Slightly fluctuates depending on sports events as well, but it's less than half. Whereas H2 in 2016, with around 52% of the entire market size was generated in H2. If we look, if we take this weight as an indicator for 2017 weight, we can extrapolate from our first half results. So we already know that the first half grew by 11.5% year on year, and that was 22.5 billion. We estimate that we see round about 10% growth in the second half of the year. A slight slowdown, not much, due to the increased maturity of the market, some regulatory uncertainty, Brexit, and so forth. But the macroeconomic environment is overall stable and favorable. So again, we're going to see a strong Christmas business, of course, and assuming this slight slowdown in H2, we can expect a market of an approximate size of 46 billion euros for 2017. Of course, we can validate those forecasts when the full year ADEX comes out, but this means that we will have a new market high in 2017. Growth might be slightly below 10%, slightly above 10%, but growth rate will not increase in the second half beyond the 11.5% that we have observed in the first half of the year. So we'll close Interact with a new market high of 46 billion compared to the around 42 billion that we had in 2016. So this was the last year before GDPR hit, and the last year where the regulatory environment isn't changing. We're overall expecting, of course, some uncertainty to GDPR, as many companies are not ready yet. But there will be some leniency on the part of the regulators in the first phase. It will also, as some say, lead to a positive shakeout of the industry that can reinstate trust. We've had some trust issues in the industry. And we see many new formats with video, an increase in the use of first-party data, the return of contextual advertising, which will all help put the market on a growth trajectory. With that, I want to close the presentation of the numbers, and I think, Alison, we can open the floor for any questions that there might be. Thank you very much.
Thanks very much, Daniel. I'm just seeing whether we've got any questions coming through. Okay, so the first question is about native, Daniel, talking about what we think the growth of native advertising looks like, given that it's a great driver of mobile as well.
That's a good question, and a tricky one, as a consensual definition of what really is native advertising is still lacking. Different vendors in different markets define native differently. So having sounded out different IABs and consulted various studies that they have been undertaking, we are not splitting out native here. There are some publishers who are doing it very well, and I think one of the pioneers here was Quartz, QZ.com, who does I think nearly all of its ad revenue through native. However, I think concerns about execution really remain. Clear demarcation between editorial content and advertising content and so forth. So unfortunately, I can't provide any numbers or guidance on the growth of native. However, I'm going to say this: overall, the world of interruptive advertising that blocks or interrupts people's experience is facing increasing hurdles. So making advertising more relevant and more naturally embedding it into a user experience is going to be essential. Native, if done well, can be one part of that. And the other thing is, of course, to look at other kind of non-paid media or other modes of data-driven consumer engagement. For instance, if we look at the IAB US summit last week, I think it was clear that there was a trend to own the customer experience, in particular when it comes to direct-to-consumer brands, where increasingly the brand asset or the primary brand asset isn't the product, the hard product they're shipping, but it's the seamlessness of the customer experience. So in the future, we're going to see an increasing blend of paid media and other experience design as an integrated ad category, and native can well be a part of that.
Okay, so we've had a few other questions and points coming through on native. So what I would say on that point further is, if those people are interested in exploring topics related to native further, they can contact us with a view to joining our native advertising and content marketing task force. So we'd be really happy to welcome you there, and so please do follow up with us on that. Okay, we've had another question, Daniel. I think we can probably squeeze another one in about the percentage of programmatic out of the full online advertising pie. So I think it's a good opportunity to remind people about our programmatic study and what that's telling us and the timing of that, if you don't mind.
Of course, yes. So we didn't split out programmatic here in the first half study, but as Alison mentioned, last year we also conducted at the end of last year a market sizing of the overall programmatic market, and that was relating to 2016 numbers, Alison, if I remember correctly. And something very interesting happened in 2016, that the European digital ad market became, of course, display side here, not counting classified directories and search, but the European digital display ad market became programmatic first, with 50.1% of all ad spend being transacted programmatically. So again, here, our definition of programmatic is quite broad. It doesn't just refer to real-time bidding, but also to non-RTB formats such as direct guarantee, programmatic direct, programmatic guaranteed, unreserved fixed rate, and so forth. So we see programmatic as workflow automation and as the data-driven transaction buying and selling of advertising. So the European ad market has become programmatic first. Some markets have a higher programmatic share than others, of course, but we can expect this share to increase in 2017 and forecast that around 57–58% of the overall market are going to be programmatic this year, and it will grow even further in the next couple of years. I think the structure of programmatic is going to change, certainly, with less availability of third-party data. We're going to see a squeezing of the supply chain, and programmatic, in order to continue growth, has to repair trust issues, transparency issues. A lot of work being done already on the side of accountability. Lots of blockchain conversations are happening. Many of those are kind of pre-product level, but there's a lot of I think conversation right now about the correction of the supply chain, which done rightly will greatly benefit programmatic, and if done poorly or not being done at all, will midterm reduce the growth potential of programmatic.
Thanks, Daniel. So I think I'd just like to say there's a couple of other questions in the call that we will try to follow up on separately after the call, okay, and liaise with you, Daniel. And I just really want to kind of thank people all across the industry and encourage people at the same time, because, you know, we produce this report thanks to everybody submitting to their local IABs and the local IABs submitting data to us. So it's only by everybody really contributing that we can do this. So thanks for that. And the other point is regarding the evolution of these studies and you know, the different topics within digital advertising that we cover. We're always looking for people to help us evolve that within our AdX benchmark task force. So again, if people are interested in that, do get in contact with us. So I want to follow up now. I'm just going to give people a brief view on Interact, as we've talked about Interact. So as I mentioned earlier, our Interact conference is going to take place on the 23rd and 24th of May in Milan. We've got a great lineup of speakers, and we've got early bird ticket offers available until the 31st of March. The other opportunity, which you can see here on your screen, is our 2 awards competitions, the Mix Awards Europe and IAB Europe Research Awards. They close on Friday, the 2nd of March. You can find out more information about the categories on our website, but I really would encourage everybody to try to enter these awards and get your campaigns and research projects recognised across the industry and by your peers. So we do run, after the awards, a series of webinars where the winners are invited to present their campaigns and projects back to the industry. So it's really well worthwhile doing this. So thanks for taking a moment to think about that. And just lastly, I'd like to mention some further upcoming webinars. So we have a webinar on building transparency and trust in the digital advertising supply chain coming up on the 14th of March. And then also our second virtual programmatic day. So our first virtual programmatic day was a huge success, featuring speakers from across the industry, and in particular our programmatic committee. So we have 2 virtual programmatic days planned for this year, and I really look forward to welcoming people in that as well. So again, I'd like to go back to Daniel and thank you very much, Daniel, for your presentation today. It was really informative, and we're looking forward to next hearing from you at the Interact conference. Thanks, everybody.
Wonderful. Thank you also from me for your time, and I look forward to working with you on the full year edX 2017. I think it's going to be a great year and another great study.
Thanks, everybody. Goodbye.